Wow. Huh. What a week, huh? It's like riding a financial roller coaster, right?
Mhm.
Up, down, all around. Mixed signals all over the place.
Definitely keeping us on our toes.
Yeah. And of course, we've got the Fed getting ready for their big meeting. Everyone's kind of holding their breath, right?
Yeah.
To see what happens next.
Absolutely. It's a pivotal moment, you know? We're seeing some positive signs, some good things happening. But at the same time, there are these little warning signs, right? Makes you wonder which way things are going to go.
Definitely a lot of uncertainty, that's for sure. Especially with the election just around the corner, too.
Oh, absolutely. Adds another whole layer to everything.
Well, thankfully, you sent over some articles to help us kind of break it all down.
Yeah, hope those are useful.
Yeah, definitely.
Mhm.
We've got stuff about the Fed, what they're up to. Also, it looks like Warren Buffett and Berkshire Hathaway are making some interesting moves.
Definitely some head scratchers there.
And then there's this whole private credit thing that I keep hearing about. Not really sure what to make of it, to be honest.
Yeah, it's a bit of a mystery to a lot of people, I think.
So where should we start with all this? What's the most pressing thing?
Well, the Fed is always a good place to begin, right? The heart of the financial system.
Makes sense.
And it looks like they're probably going to cut interest rates again, probably by, let's see, about a quarter point,
Okay.
which would put the target rate at 4.5 to 4.75%. The big question is, why? Why are they doing that?
That's what I was wondering. I mean, isn't the economy, doing okay? At least from what we're hearing. Like
Hmm.
last quarter, GDP grew by what, like 2.8%?
Yeah, that's right, 2.8%. Solid growth for sure.
So is that not good enough? What's the deal?
Well, see, that's where things get interesting, you know? The October jobs report, that showed a surprisingly low increase, only 12,000 jobs added.
Oh, that's pretty low, isn't it?
Yeah, the weakest growth we've seen since December of 2020.
Hmm.
So the Fed, they're in a tricky spot. See, they want to support economic growth, keep things moving, right?
Right, right.
But they also have to keep an eye on inflation. Oh, right.
Can't let that get out of control. So it's
Okay.
a balancing act.
I see, yeah. So 12,000 jobs, I mean, that seems like a pretty clear signal that things are slowing down, right?
Well, it's not quite that simple. See, that October report, that was affected by a few things, like hurricanes, for example,
Oh, right,
and
right.
some strikes as well. Those things, they can really mess with the numbers, make them hard to read. So got to look beyond just one data point.
Yeah, that makes sense.
Like consumer confidence, for example. That just hit a 9-month high. People are feeling good.
That's good.
And corporate earnings, those have been pretty healthy too. Companies are making money. Plus, people are still saving. The personal saving rate, that's at 4.8%.
Huh. So it's not all doom and gloom then.
Not at all. I mean, it's a mixed bag. The
Yeah.
economy's sending out all these different signals.
Right.
And the Fed, they're trying to put it all together, figure out what the real story is, like a puzzle, right?
Yeah.
Trying to see the bigger picture. Yeah, that makes a lot of sense. So are we supposed to be worried or, optimistic? What's the vibe?
Tough to say. I think cautious optimism might be the best way to put it.
Cautious optimism. Okay.
Yeah, I mean, there are definitely mixed signals out there, so got to be prepared for some bumps along the way, volatility.
Right. Right.
But hey, there's always opportunity too.
Okay, good to know. So let's shift gears a bit. Let's talk about Warren Buffett and Berkshire Hathaway. What's going on there? What's piqued your interest?
Well, their operating profits, they actually declined last quarter by 6%.
Oh, wow, 6%. That's a pretty big drop.
Yeah, it might seem alarming at first glance, but here's the thing. They still managed to exceed analysts' expectations.
Hold on. Their profits went down, but they still beat expectations. How does that work?
It's kind of telling, actually. I mean, first of all, expectations for Berkshire Hathaway, those were already pretty low, which tells you something about the market sentiment, right? Kind of cautious overall. But second, and maybe more important, Berkshire, they have this massive cash pile.
Oh, right. I've heard about that.
It's huge. Over $325 billion in cash.
$325 billion. Wow.
Yeah, that gives them a lot of flexibility, a lot of options.
Right. So what are they doing with all that cash?
That is the million-dollar question, isn't it? Well, we know they sold off some Apple stock last quarter, like 100 million shares.
Whoa. Even Warren Buffett's getting out of Apple. Is that a bad sign?
Well, not necessarily. I mean, they still hold a huge stake in Apple, something like 300 million shares, so it seems more like they're rebalancing, not a complete exit.
Okay, that makes sense.
They also sold, let's see, about $9 billion worth of Bank of America stock.
Interesting. So what does it all mean? What's Buffett thinking?
Hard to say for sure. Maybe he sees better opportunities elsewhere, or maybe he's just playing it safe, given all the economic uncertainty we've been talking about.
Right, right. So we've got the Fed trying to decipher these mixed signals, and then Warren Buffett making these moves that have everyone guessing.
Yeah, it's like a game of chess, isn't it?
It is. So anything else we should be paying attention to? Any other pieces to this economic puzzle?
Oh, absolutely. There's this kind of quiet revolution happening in the lending world. It's called private credit, and it's growing fast, like almost $2 trillion in assets.
2 trillion. Wow. Okay, I've heard that term, but I'm not really sure what it means. What exactly is private credit?
Okay, think of it this way. It's loans that are made by non-bank lenders.
Hmm.
And they often go to companies that might have trouble getting a traditional bank loan. Maybe they're in a riskier industry, or they need money fast and don't want to deal with all the bank bureaucracy.
Ah, I see. So it's like like a shadow banking system?
Yeah, you could say that. It's a way for companies to access capital outside the usual channels. And for lenders, well, it offers the potential for higher returns than, your typical bank loan.
Higher returns. Okay, now you've got my attention. Who are these private lenders then? Who are the players in this game?
We're talking big names here, like Blackstone, for example.
Oh, wow. Okay.
Apollo Global Management, Ares Management. These are major investment firms. They see a lot of potential in private credit.
So this isn't some small-time operation.
Hmm.
But isn't it riskier than traditional bank loans?
Well, there are definitely risks involved. I mean, private credit, it's less regulated than bank lending.
Right.
So less oversight, right? And that could mean bigger losses if borrowers start defaulting.
Yikes.
But, regulators haven't really sounded any major alarms yet. So it seems to be a calculated risk that a lot of investors are willing to take.
It's like, wow, okay. So we've got, the Fed trying to figure out what to do, and Warren Buffett doing his thing, and this private credit market popping up. And then on top of all that, we've got this election coming up. I mean, it feels like no matter who wins, it's going to be a big deal for the economy, right? For everyone's wallets.
Yeah, you're not wrong. It's definitely going to shake things up. The election adds like another layer of complexity to it all.
It's absolutely. So let's talk about that for a minute. What are some of the key areas where, their policies, whoever wins, could really have an impact?
Okay, good question. Well, manufacturing is a good place to start. One candidate, they're all about bringing those manufacturing jobs back to the U.S., even talking about tariffs,
Yeah, I've heard that. Sounds good, right? More jobs here at home. But I'm guessing there's another side to that, too.
Yeah, there always is, right? I mean, tariffs could make things more expensive for consumers and, businesses. It might be harder for them to compete globally. And those manufacturing jobs that might come back, they might not be the same jobs that were lost, Things have changed a lot.
Right, with automation and all that. So it's not as simple as just like, bring back the jobs.
Yeah.
Okay, what about tech? Tech's been a big driver of the economy lately. What are the candidates saying about that?
Yeah, good point. They both seem to agree that technology and innovation are super important. But they have different ideas about how to regulate it. One candidate, they're more hands-off. Less regulation, they say, so that innovation can thrive.
Makes sense.
And the other candidate.
They're more concerned about, consumer privacy and monopolies. They think some of these big tech companies, they've gotten too powerful, need more oversight.
Right, so it's a question of how much government involvement is the right amount.
Okay, let's talk healthcare. That's huge, right?
Yeah.
Affects everyone. What are the candidates saying about that?
Oh, yeah. Healthcare is a big one. And another area where they have very different ideas. One candidate wants to stick with private insurance, competition, market-driven approach. That's what they think will keep costs down.
Okay. And the other candidate?
They're more for a bigger government role, maybe expanding Medicare or even, going towards a single-payer system.
Wow. So we could see some major changes there, depending on who wins. Okay, we've talked about manufacturing, tech, healthcare. What about energy? That's a big one, too.
Yeah, energy is interesting because it's tied to so many things, right? The economy, the environment, the whole thing. One candidate, they're all about, increasing energy production here in the U.S., oil, gas, all that. Not as focused on climate change.
Got it. And the other candidate?
They're pushing hard for renewables, solar, wind power, that kind of thing. And they've said they'll rejoin the Paris Agreement, So, yeah, very different approaches.
It's wild to think about, all these different sectors, manufacturing, tech, healthcare, energy, they could all be headed in totally opposite directions depending on who wins this election.
I know, right? It's a lot to take in. But it really shows you how much power this election has, you know? It's not just about choosing a president. It's about choosing a direction for the country, for the economy.
Absolutely. It's about our lives, right?
Mhm.
Our jobs, our investments, healthcare costs, even how much we pay for gas.
Mm.
It all comes down to this.
You got it. And that's why it's so important for people to really think about it, you know? Be informed. Don't just vote for a person. Vote for an economic vision, something that aligns with your values, your hopes for the future.
So true. So, to recap, we've got this election coming up, big changes on the horizon. We've got the Fed trying to navigate these uncertain times, Warren Buffett making his moves, and then there's this private crit thing, which could change everything. It's a lot.
It is a lot, but I think we can pull out some key insights from all of this, you know? Stuff that can help people understand what's going on and make good financial decisions.
Okay, that's what I want to hear. Give us the big picture, the takeaways. What does all this mean for people trying to, make sense of their finances?
Make smart choices. All right, so we've covered a lot of ground today. Fed, Warren Buffett, private credit, this huge election coming up. It's a lot to take in.
It is. But I think it's been really helpful, to kind of break it all down. So you mentioned some key takeaways, some big picture things people can learn from all of this to help them make, good financial decisions. What are those?
Okay, well, first takeaway, I think we're at a crossroads, you know? A lot of uncertainty out there, but that also means opportunity, right? Potential for things to change, to grow. The key is to be informed and
Proactive.
Informed and proactive. Okay, I like that. So what does that look like, practically speaking? How can people be more informed and proactive?
Well, it means, not just reading headlines, not just passively consuming news. You got to dig a little deeper.
Mm-hmm.
Read different perspectives. Try to understand the why. Why are things happening the way they are? And then think about how that might affect you, your job, your investments, your future.
Yeah, don't just wait for things to happen. Get ahead of the curve.
Right.
What else? What other takeaways are there? Think about diversification, spreading your risk. We talked about private credit. That's just one example. There are other what they call alternative investments out there. Real estate, commodities, international markets. Don't put all your eggs in one basket, right?
Classic advice for a reason. Makes total sense.
Ah.
Okay, so we've talked a lot about risks, uncertainty, but you also mentioned opportunities. What are some of the positive things you see coming out of all this?
Well, one thing that's really exciting is the potential for innovation, right? When things get tough, people get creative. They come up with new ideas, new solutions. We're probably going to see breakthroughs in technology, business models, all sorts of areas as people adapt to these challenges.
So it's not just about weathering the storm. It's about finding those silver linings,
Yeah,
those sparks of creativity that can lead to something better.
I like that. Yeah, exactly. And the other big opportunity, I think, is in informed decision-making, right? The more you understand about what's happening in the economy, the better choices you can make for yourself, for your family. You can find opportunities that other people might miss, and you can protect yourself from potential risks, too. It's about empowering yourself with knowledge.
Knowledge is power. Couldn't agree more,
Yeah,
especially in the financial world.
for sure. And remember, it's an ongoing process, The economy, it's always changing, always evolving. We got to stay adaptable, stay informed.
You've given us a lot to think about today, that's for sure. We've explored the Fed, Warren Buffett, private credit, and this election. That could change everything. It's been quite a deep dive.
It has.
But I think we've come away with some really valuable insights,
Uh-huh.
about how things work, how to make smart choices. We've learned about the Fed and how they're trying to balance everything. We've learned about private credit, the potential risks and rewards. And of course, we've talked about how this election could reshape everything.
It's a lot.
It is. But the main takeaway, I think, is this. If we stay informed, if we're proactive, if we diversify, we can navigate all of this uncertainty with more confidence. And maybe even come out ahead, right?
Absolutely, that's the goal.
Exactly. And hey, that's a great note to end on, don't you think?
I think so.
So, to everyone listening, thank you for joining us on this deep dive. It's been a fascinating conversation. And we hope you've learned something valuable today. Stay curious, stay informed, and as always, happy investing.